Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Over 24 banks have got together and signed an inter-creditor agreement.
I would take it as a practical solution, whether improvement or not, let us see.
The idea is not at all to impose in any manner the majority fee.
I do expect some of the foreign banks to sign.
Dissenting banker can also buy up the entire consortium of loans at a 25% premium to the resolution value.
I don't foresee, in fact, a situation where we will be making a very frequent use of this clause.
Good morning. Welcome to Morning Call Bazaar. I'm Lata and with me are Anuj and Sonia. We will come to the bankers' discussion in just a bit, but I think today the markets will cry for more attention. Yesterday, so many records were broken, so clearly the bulls are back with some might, you will have to say. There's something going for them for sure, because there was FII buying in the positive terrain after a fairly long gap, and not a small number, 260 crore welcome numbers, and some delivery-based buying in stocks like UPL and ITC in particular. So somebody clearly is impressed by the GST as well as individual stock performance. It's the Midcap rally that I'm still worried about. Maybe there is still more steam left, but at least one part of the rally, the PSU bank stocks, I don't think there was anything in what all the bankers told us to justify that rally. So on that rally, I'm a little doubtful, whether it can be as broad-based as it was yesterday. Morning, both of you.
Hi, good morning, Lata. Good morning, Anuj. Yes, I mean, in the mid-cap space, of course, apart from the banks, the consumer durable rally was spectacular, right? In the entire consumption space, I mean, if you look at Havells, Bata, Godrej consumers all sitting at new highs. The only question is, it's been a narrow rally, but will it now sort of widen in terms of gaining more ground from other sectors, as we've been discussing? Anuj, morning. This is a new high for the market. You think it's going to have more leaders now? It's going to get a bit more broad-based compared to what we've seen in the past?
Morning, Sonia. Yesterday was one of the most broad-based rallies that we had. Yesterday, I think, was a really good day. Yesterday felt like, there was a rally. Because yesterday, the Nifty was up 75 points. The junior was doing well. I'll come to that. There's a good chance that the current breakout is real. And traders need to believe that the breakout is real unless proven otherwise. What would that be if the market has a 50, 60 point or 100 point downtick today? I won't rule out the Nifty going to new high before the expiry. It's 11,160 thereabout. Yesterday's move, why I give it more is because it was led by the Nifty Junior. In fact, this week, the Nifty is up 0.7%, while the Junior is up 1.7%. The mid-cap is up 1.1%. Junior going up 1.7% is always a bit of a confidence vote in the market. So let's see. The only problem is it had a massive fall, and it's now at 20-day moving average, the Nifty Junior. So is there going to be 20 DMA halt, or is there going to be follow-through buying? If there's follow-through buying, then perhaps the market could have put a bit of a floor in place. Now, in terms of other interesting bit, yesterday what was most interesting for me and most heartening for a bull was that the Nifty rallied 75 points despite 24-point drag by HDFC Bank and Reliance. Now, HDFC Bank and Reliance are the two stocks which have led this market all through this year. The two leaders were down 25 points, still the Nifty rallied 75 points. So, X of the two leaders, the market rallied 100 points, the biggest contribution being ITC 22 points. So, it was broad-based yesterday. Your logic should be to now buy the dips. I don't think you're going to get the dip that the SGX Nifty is indicating. I think the market perhaps has now got good things going for it, and the erstwhile resistance of 11,050 would now act as support. So if the market gives you any kind of dip, perhaps 11,050 as a sort of your stop, you want to try a buy trade here, because the market is looking a bit more broad-based. Global markets are also doing well. Hang Seng is up 350 points. So all in all, I think this perhaps the market has legs, and with GST and all of that, there's I think some good thing going. And this mid-cap rally is also happening from a really beaten down levels. It's not happening from aggressively high levels. So that's why perhaps there's two or three more days of mid-cap rally which could be in store.
That's exactly my point as well. The rally certainly had legs because I think it was coming on the basis of higher consumption. You had good results from the likes of Havells and Bata. On top of it, you're getting a tax cut for these products. So that way that rally could get extended. But the reason why I put the PSU banks as a sector over there is that is what makes me disbelieve the rally. I mean, some of them had very good legs to run, like the consumption stocks. But I wouldn't say that of the PSU banks. People were, bidding up those stocks because of the intercreditor agreement. The intercreditor agreement is only a beginning. It is replacing the joint lender forum. Because of that, if anybody is buying the banks, then I really want to think that not everyone should be participating in this rally. Some stocks, yes, but not all stocks. We have to be very careful of the mid-cap rally. If it is the second coming, then you really will have to pick and choose and not ride every stock.
Oh, absolutely. You spoke about the earnings pickup in Havells, Bata. Good set of earnings coming in from ACC as well, right?
Yes.
And cement is generally the barometer of the infrastructure pickup. So let's see, maybe that entire pocket could also move today on the back of those good numbers. But let's take a look at what our wise experts have to say as we head into trade this morning. Surendra Goyal of Citi says, despite a relatively improved earnings outlook in FY19 versus FY18, we continue to expect 2018 to be a tough year for Indian equities, given a tough macro, high valuations, risk of FII outflows, slowing domestic flows and upcoming elections. He says earnings downside risks remain given dependence on progress of stressed asset resolutions. Further, he adds, valuations remain quite expensive at the +1 standard deviation above mean. Surendra says their Sensex December 2018 target is at 35,700 amongst the current batch of outperformers for 2018. He has a bottom-up positive view on HDFC Bank, Kotak Mahindra Bank and Reliance Industries. Among the underperformers, he has positive views on ICICI Bank, SBI, Tata Motors and Vedanta. So their year-end target has already been surpassed.
Oh, yes. But markets will zigzag. Let's get money market views. Bhaskar Panda of HDFC Bank says the US dollar, that is, has rallied overnight and most of the Asian currencies have been impacted negatively. He says this trend will also be visible as far as the USD INR is concerned. He expects the day's range to be within 68.90, 69.10 for the USD INR.
And he also speaks about the bond yield. He says the 10-year benchmark bond yield is looking up. He expects it to remain sideways for the time being and sees the day's range within 7.8 to 7.85%.
I just want to add a bit over here, and I think Nigel will say that in his worldview. There has been a bit of a tremor in the Japanese government bonds, the JGBs. The yields have risen because there is an expectation that the Japanese government is going to change the way it intervenes, a steepening of the curve, and that has pushed up yields. And as Bhaskar Panda says, separately you have seen the dollar rise a bit. So therefore, Anuj, this could be a day today when techs are good and financials are not. It seems to be that kind of a start at least.
Okay, that would mean, of course, the market could be flat for starters. That's what the SGX Nifty is also indicating. But here's Nigel with the world view.
Well, the US markets ended more or less flattish, but the Nasdaq, that was a relative outperformer in yesterday's trading session. A whole host of those tech stocks, they did well. Remember, quite a few of them come out with its set of numbers. Alphabet, Facebook, as well as Amazon. Alphabet came out with its set of numbers post-close. The stock was up more than 3%. It has 5% weightage on the Nasdaq. So today as well, we could see the Nasdaq do a relative outperformance. The sheet will be waiting by for results from the other two. But as you just said, overnight, we did see the yield spike up by nearly around 7 basis points odd. It followed really the move that we saw in the Japanese bond yields. Now, surprising that we saw some of these banking stocks as well do well, because normally when you see bond yields go higher, you'll think that, in fact, maybe the treasuries of these treasury portfolios could get hit. But quite a few of those banking stocks did well in yesterday's trading session. European markets, though, they ended in the red. The auto stocks, they were relative underperformers. Got news yesterday that, in fact, Fiat Chrysler's chief had stepped down surprisingly. So on the back of that, that stock was under pressure, and Ferrari as well was lower in yesterday's trade. No worries, though, with regard to the Asian markets this morning. Most of them were trading well in the green the last time I checked. All of them still holding with some green. And keep an eye out on the Shanghai as well as the Hang Seng. Both of them up more than 1%. SGX Nifty, though, flattish for starters. Back to you all.
Okay, thank you very much for that, Nigel. So that note of caution that Shanghai has turned in the green, and we could take those green cues as well. Let's stay with those measures to tackle bad loans. The State Bank of India Chairman Rajneesh Kumar spoke to us yesterday, and he said that banks have identified some bad power assets. Some of them will have to go to the NCLT, but some of them may not have to go because they are up there on restructuring. He went on to say that this process will not be completed by the 27th of August. Now, 27th of August is important because that is the day when the Reserve Bank's timeline ends. They gave 6 months for assets over 2,000 crore to be restructured. If not, they have to be sent to the NCLT. Basically, Mr. Rajneesh Kumar told us that some power assets, he hopes, are almost restructured, and banks are going to ask the Reserve Bank for a little more time to restructure them. They're expecting that deadline to be extended. Listen.
Power assets, we had identified, the lenders had identified certain assets under the Samadhan scheme. And there was a process which we ran about determining the sustainable debt, inviting the bids. So all that process, we will be able to at least arrive at a conclusion, and the complete transfer of the asset and the related formalities, that will not be possible to be completed by 27th August. But I believe that lenders have a very strong case in certain cases where we will be making representation to RBI, case specific, that there should be some time given to complete the process. We have identified the assets which will go to NCLT, and we have identified the assets which need not go to NCLT in lender's view. But despite that, if the regulatory this thing is that no, then it is no, then nothing can be done.
It's a good-looking screen across Asia this morning. The SGX Nifty is not doing much, it's flat. But just pull up the Asian market screen for you, lots of green there. The Chinese market has picked up substantially in the last 1 hour. Japan is up almost 0.6%. And look at Hong Kong, almost a 400-point rally there. The yuan has continued its decline, so that's aided a bit. And property construction shares are doing pretty well in those markets. But for our own markets, we've had a very good tidings so far. Will that continue, and what are the stocks to look at? Our entire team is here. Anuj, what are you looking at today?
So I'm going with two banks today. One is IndusInd Bank. It's bounced back from 20 and 50-day moving average. If you followed IndusInd Bank, it's a classical pattern. It corrects post numbers despite the best ever results because there's a lot of buying before that. And after that, the correction is over and it swiftly moves back to new highs. It's within 3% of a lifetime high, so should happen anytime soon. And while I take Lata's suspicion on board, I think Bank of Baroda is showing signs that there's still some buying left here. It's shown a quick move from 52-week low to 50-day moving average, and it's backed by very strong delivery buying. Yesterday, there was massive delivery buying here, not just some intraday trading of futures and options action. So perhaps that's where there could be some more traction. Let's see if that happens.
No, when I say PSU banks, I do exclude these SBI, Bank of Baroda, even Vijaya Bank. I think the numbers were very good. Exactly. So there will always be one-off performers who could find delivery-based buying. I was referring to generally the category of PSU banks. Okay, but I think the stock of the morning is definitely going to be United Spirits. Sonal, results disappointed.
Disappointing set of numbers, Lata. It looks like a royal challenge for the company to get back its volume growth and margins. The numbers were way below our poll. Revenue came in at 2,000 crores. EBITDA came in at 192 crores versus a poll of 284 crores. On margins, they came in at 9.6% versus an expectation of 13.2%. Overall volume growth, that came in at just 1%. And if we talk about the segments, the prestige and above segment, which contributes to 63% of the revenues, there the volume growth was around 13% versus an estimate growth of 16 to 17%. Even in the popular segment, volume declined by 9% versus an estimated growth of around 5 to 6%. However, management still positive. They reiterated their guidance of double-digit revenue growth and their margins in the mid to teens range. Brokerages, they are still not very positive on the company. Morgan Stanley has an underperformed rating. Kotak also has a sell rating, and they do not see any upside further for the stock, but expect the stock to be in red today.
Okay, expect the stock to open in red for sure. Now keep in mind, over the last 1 month, the stock has fallen from 700 to 580. So some part of it perhaps was known to the market. So it will be interesting to see the market reaction. But Nigel, ACC's numbers?
Well, Anuj, the numbers look very, very good. And what gives them cushion is that the stock is flirting with a 52-week low, and valuations as well were supportive. In terms of the numbers, top line came in at more than 3,800 crores. That's a good beat in comparison to our number of around 3,650 odd. We're expecting some compression on margins, but the top line beat was led because volumes came in at the higher end of spectrum, and margins as well, they didn't get compressed as much as we were working with. So that as well was a bit of a beat. Why is that? Because operating leverage played out. You had the other expenditure that's down by 1% when you have your volumes growing by around 7%. And importantly, the RMC business, that contributes only 10% to the top line, but now that's delivering better numbers on an EBIT front. Nearly 28 crores is what we got out there. The profit number as well beat our estimates on the back of a good operational performance. Morgan Stanley, they have an overweight rating on the stock with a target price of around 1,887. They're saying from here on, margins will have to drive the earnings because capacity utilization levels are already at around 89%. Back to you.
All right. Thank you very much for that, Nigel. Mangalam, would you be as confident of V-Mart's numbers?
Well, not particularly, Lata, but largely the numbers are absolutely in line with what the street was expecting. So the revenues, they grew at around 15%. We saw a number of 361 crores. Jefferies was estimating 365 crores. The EBITDA, that one grew at 16.5%, close to around that 43.2 crore mark. Again, the expectations was closer to that 43 crore mark itself. Margins at 12%, pretty much in line with what was expected by analysts. And the net profit came in at 25 crores, closer to the expected level of 25.5 crore itself. The only disappointment that came in was from the same-store sales growth front, which came in later after the management reported their press release, 1%, and the street was expecting 4 to 5%. This came on a high base of 23%. Remember, all the retail companies before the GST quarter sold much more, so it's come on a high base. Let's see what the management has to say, and the stock has rallied about 5 times in the last 2 years, so it'll be very interesting to see which way the stock moves today. My sense is will follow perhaps the way the markets move. More details we get from the management in a bit.
Okay, thanks a lot for that. Yes, the stock has been a huge wealth creator for investors in the past. But let's find out what's happening with Syngene. Not so much on numbers, but more on the extension of a tie-up that they have, a collaboration that they have with Baxter. Ekta?
Yes, absolutely. Well, good news coming in for Syngene because they've had this R&D, dedicated R&D facility that they've set up for Baxter all the way since 2013. So it is an extension of this particular relationship that they have with Baxter, which is now extended till 2024. It means additional R&D infrastructure which will be set up, as well as the addition of more scientists working on Baxter projects. So it is positive news for Syngene, as it means that there is a visibility of revenue going forward. Plus also the numbers do come out tomorrow.
Okay, thanks a lot for that. Well, Rima, L&T Infotech and L&T Technologies numbers?
Well, first, Lata, on L&T Infotech, it's a good set of numbers. It's a beat on revenues as well as margins. The dollar revenue has come in at 3.5% versus estimates of about 2.8%. On a constant currency basis, it's a 5.1% sequential growth and a 23% year-on-year growth. And if you look at the trend on the constant currency basis on a year-on-year basis, from low double digits, it's now crossed the 20+% mark. Adjusted margins have come in at 17.7%, slightly higher than expectations. For L&T Technology, it's a big beat on the revenue front. So their constant currency growth is at 5.6%. For the full year, the company had told us that they will at least do a 16% growth. But now analysts are saying after such a strong start to the year and the kind of momentum it has, the company is on its way to surpass its guidance. So CLSA expects a 22% growth in revenues for FY19. EBITDA for L&T Tech has come in at 17% and profits have jumped up by 24.4% sequentially. In the green for both.
Okay, the green for both. In the green, definitely for Delta Corp, looks good.
Oh, absolutely. It looks very good. And this stock has some cushion. It's fallen about 30% this year because that fee structure changed by the Goa government. So perhaps now with good numbers, there's some legroom on the upside. Very strong earnings coming in. Overall revenue growth of almost 50%. Yes, it was led by the casino gaming division, which was up 52%. But don't lose sight of the online gaming division as well. In Q1 of FY18, it had zero revenues. In Q1 of FY19, the online skill gaming got 40 crores of revenue, so big boost there. EBITDA has gone up 44%. MK has written a note. They maintain a buy with a target price of 294. They say that the positive catalyst for Delta Corp now will be the new gaming policy by the Goa government, and the recent price correction of 30% has factored in all the negatives from the new license fee structure. So I expect the stock to be in the green.
Okay. Well, that's a bunch of stocks that have done well on their results front. But Sonal, you have a couple of more.
Yes, I do, and I have equal number of bads and goods. I'll start with Balaji Amines. Strong set of numbers led by the Amines division, and the hotel division finally reported a EBIT profit after losses for so many years, and operating profit margins that expanded by 300 basis points. Granules, on the other hand, reported a disappointing set of numbers. The operating profit margins, they declined by 400 basis points. Profits were up, but that was mainly aided by the other income, higher other income that came in this quarter. Tejas Network, good set of numbers. EBITDA margin expansion of around 600 basis points is something that the street should like. On the other hand, ICICI Securities reported a profit decline on a sequential basis. Expect a red on that stock today. Back to you.
Okay, thanks a lot for that. So here's a quick recap then of our top stocks to watch. Stocks with some positive news flow are IndusInd Bank, Bank of Baroda, ACC, V-Mart Retail, Syngene, L&T Infotech, L&T Tech, Delta Corp, Balaji Amines and Tejas Networks, while stocks that have negative news flow are United Spirits, Granules India and ICICI Securities.
Okay, well, there were a couple of stocks which stood out with their poor performance on the Sensex and the Nifty yesterday. Among them was Bajaj Auto. Over the past 2 days, I think the selling has been as high as 14% on that stock. What are the brokerages seeing?
Well, a lot of brokerages have now downgraded the earnings estimates after what the management had to say at the conference call. Their case is that the last time such a price war took place, all the companies lost 200 to 400 basis points of margin. So let me quickly put the brokerages in front of you. Macquarie has downgraded Bajaj Auto to an underperform. They've revised their target price to 2,400. They've lowered the FY19-20 EPS by 4 to 5%. They say the new strategy of Bajaj Auto to sell at a loss comes after years and years of them maintaining their margins at 20%. So it's a negative, it's a shock for the street. They would have preferred hard work of product innovation and brand strengthening rather than just going ahead with massive price cuts. So that's where they're a bit disappointed. Morgan Stanley says in the previous price war, margins for the entire street corrected by 200 to 400 basis points. So they've lowered margins by 3 to 6% for the entire sector. All three companies, Hero, TVS and Bajaj. And they say despite the recent correction, Bajaj could see further downgrades in earnings. Citi has cut EPS estimates by 9 to 10%. They've reduced the target price. They say even this strategy to gain market share at the cost of margins is not sustainable because eventually they have to hike prices to transition to the BS6 norms in any case. So, that doesn't work. And brand equity will get tarnished in such a situation just by simply cutting prices.
Okay.
Usually what's good for consumers isn't good for shareholders.
Isn't, of course. You miss profit estimate by 100 crores, the market takes off the market cap by 2,500 crores. That's what's happened with Bajaj Auto. But the big number to watch today, of course, is going to be Asian Paints. The stock's at all-time high. So, Mangalam, what are the key expectations?
Well, the street is expecting a good set of numbers, and you said it, the stock is at a record high. I'll put another caveat, the valuations as well, not particularly cheap, but it is Asian Paints. So 48 times 2-year forward earnings is what the company trades at. The three numbers that the street should be watching out for is, the street is expecting 17% growth on the top line. So 4,450 crore thereabouts is what you should be keeping your eye out on as far as the top line is concerned. The EBITDA likely to grow by 24%, much ahead of the top line. And the number that the street is watching out for is 825 crores. The margins likely to expand by a bit and the net profit likely to grow by 20%. The number that the street again is watching out for is closer to that 530 crore mark. 17% top line growth should be led by 12 to 13% underlying volume growth. Remember, the base is favorable. 3% is what we saw in Q1 FY18 on top of that. So we're expecting around 12 to 13%. The remainder 5% comes in from the price hikes that the company has taken to negotiate or to negate the hike that we've seen in input prices as well as the volatility in the currency itself. So that is something we will be watching out for. Counterintuitive that in an environment of higher crude prices and weaker currency, the margins are likely to expand. So that is something we will be watching out for. Management commentary on input costs, demand scenario, most important on what they are talking about competition, because the competitive activity in the decorative paints has spiked. So that is something we'll be watching out for sure.